Hello, Mambo VP YouTube family. Today, I want us to talk about the most used indicator by successful traders, and this is the Fibonacci tool. Before we dive deep into the topic, first I would like to thank you for viewing this video. And if you're interested in content about the financial markets or Forex in general, well, this is the place to be. All you have to do is click subscribe, like the video, and click the bell icon so as to not miss even a single day's worth of content. And if you want to reach out to me, don't forget to check the description. Let's get into it. Fibonacci is a powerful tool that can forecast future price movements and gives potential entry and exit levels. So let's start by understanding the Fibonacci sequence. Right here, this is the sequence: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377, 610, and so on and so forth. So how are these numbers formed? Each number in the sequence is formed by adding two consecutive numbers before it. Okay, so this is, let's take an example. Like this is the previous number and this is the current number, right? So 0 plus 1 is equals to 1. 1 plus 1 is equals to 2. 2 plus 3 is equals to 5. Just like that. The previous number plus the current number is equals to the next number. That's how it's done. I won't talk about the history or the maths behind it. I know you've heard Fibonacci sequence in school and whatever your application, but I just want to talk about how it applies to traders. Okay, what we use in trading isn't the Fibonacci sequence exactly. What we use is Fibonacci ratios. In Fibonacci ratios, we see numbers such as 0.786, 0.618, 0.382, 0.236. So how do we get these numbers? How do they come to be? Okay. If we divide two consecutive numbers in the sequence, you get the 0.618 ratio. For example, if you divide 34 divided by 55, you get 0.618, and if you multiply it by 100, you get 61.8%. So here's 34 and here's 55. If you divide it, you get 0.618 ratio. If you divide two numbers in the sequence with a gap in between, okay, again there are two numbers with a gap in between, you get the 0.382 ratio. So example is, let's say, just 21 and there's this gap in between, so you divide 21 by 55, you get 0.382 ratio. Okay, and if you divide two numbers with two gaps in between, you get 0.236 ratio. Okay, so let's say 21, we skip 1, 2, and we divide 21 divided by 89, we'll get 0.236 ratio. Okay, the square root of 0.618 is 0.786 ratio. If we divide any number, any Fibonacci number, by its preceding number, we get 1.618 ratio. Okay, and this ratio, we regard it as the golden ratio. Let's say if we divide, let's say 55 divided by 34, not 34 divided by 55, we'll get the golden ratio. So how do we apply this in our trading? There are various Fibonacci tools, but I will only talk about 3 Fibonacci tools. The first one is the Fibonacci retracement tool. The second one is the Fibonacci extension tool, and the third one is the Fibonacci expansion tool. So let's start by the Fibonacci retracement. How does the Fibonacci retracement work? Fibonacci retracement works after a big price movement in one direction, then the price returns or retraces back to a previous level of resistance or support before it proceeds back to the intended direction it was going to. So let me show you an example. So after prices reached this level at 0, it pushed back to 0.618 ratio level before pushing back down. So this was a resistance level because we're selling. It pushed back down and went back up to retry the level and pushed back down. Okay, the Fibonacci retracement levels allow you to understand the wave movements of price. As you know, price doesn't move in one direction constantly. It takes short breaks before resuming its move. So we all know that price moves in such a way: swing highs and swing lows, swing highs and swing lows. That's how price moves, like this. So at least with the Fibonacci retracement tool, you know, let's say you missed this entry, right? You'll know that this is the next entry, or this is the next entry level. The retracement levels help you to know when exactly to expect the end of a pullback for you to make your entry. I think I've already told you that. The retracement level also allows you to know if there's trend reversals. How do you know if there's a trend reversal? So there's key levels we look at. Let's say, for example, we look at between this 0.382 and 0.618 ratio. So if prices go past 0.618 ratio, high probability I wouldn't trade, because if it goes past this, high probability it will be a reversal, so the price will just go back, continue going up. So I'll just leave it there. If it passes 0.618 ratio, I usually leave it. I don't trade. Okay, how do you plot Fibonacci levels? First, you need to understand that Fibonacci levels help us to just get areas of support and resistance. Okay, the levels of interest. That's what it helps us to get. Okay, before plotting your Fibonacci tool, you need to understand the market structure. In which direction is the market moving? Okay, like this was just a short example I had opened. So if the market is on a downtrend, you know at this time we have a downtrend, right? So you know that you're not trading against the trend, you're trading with the trend. Okay, during an uptrend we buy at Fibonacci's support or retracement levels. During downtrends we sell at Fibonacci retracement levels. So how do we plot a Fibonacci tool? Let me close this one so that at least we can open a new one. Plotting a Fibonacci tool. First, in your trading view, you come and click here on this. This is the Fibonacci retracement right here. Click on Fibonacci retracement and you come and let's say this is the trend, right? This is the trend we're looking at. If it's a downtrend, you come to the swing high, the highest point the market reached. Then you go to the lowest point the market reached that day. That is the lowest point the market reached that day. So we go to the highest point the market reached and the lowest point the market reached. That is how we plot it on downtrends. And the opposite applies to uptrends. Okay, so let's delete this. Let me show you. Let's take an example. Let's say this is an uptrend, right? We come, click the Fibonacci tool, and that's how we plot it. You go to the lowest point the market reached and the highest point the market reached. You do not start from the highest point and go to the lowest point in uptrends. No, you start from the lowest point to the highest point, And in downtrends, it's the opposite. You start from the highest point down to the lowest point the market reached. If prices retrace from 0 to 0.236 level, then it tells us that we have a strong trend. This usually shows us patterns like flag patterns, okay? If prices retrace from 0.236 to 0.5, this we regard to it as medium trends. So if prices would retrace up to between this place and this place, we regard this as medium trends, and they usually have the patterns like pendants, okay? And if prices retrace from 0.5 to 0.786 and above, these are weak trends. They usually have things like channels, patterns like channels, and yeah, like this one is a weak trend, okay, because it came and retraced from 0.618 and back. This is the end of part 1. In the next video, we'll talk about combining Fibonacci retracement tools with other strategies like support and resistance, chart and candlestick patterns. We'll also talk about the last 2 Fibonacci tools that I use. So as to not miss the next episode, click subscribe, like, and share the video to show us support for the work we are doing. And if you would like to join my broker, click the link in the description to join FX Pesa today. Thank you.